Hey everyone, thanks for joining us here in the charts. It is the Crypto Flight Edition. It's Napolean Macro speaking. It's been some time since we spoke of Dogecoin. Let's take a look at the charts. We're going to pull up the monthly candles to see if we can find some sort of structure being formed to determine whether or not Dogecoin is getting ready to turn around and move to the upside by, again, the monthly candles. We're also going to crank it down to the lower time frames on the daily candles. Just pull up the 50 and the 200 exponential moving average just to see where we are on that time frame. So if that piques your interest, stick around to the end. Let's get into it. Welcome back, loyal family. If you're new here, we only explore price action. Thanks for sticking around, all of my loyal subscribers. Let's go ahead and dive right into the charts here, shall we? So today's September the 22nd, 2022. Current price of Dogecoin, 6 cents, slightly positive, 3.1% for the day. Okay. All right, lovely ladies and gentlemen, here we are once again. All right, so here's what I found on the monthly candles. Pretty simple to see. I'll do a brief explanation if you're new, and those of you who have been with us for some time, if you're still just kind of unsure about how to find those structures. You got to pull up the higher time frames. You can also pull up the lower time frames as well. I wouldn't prefer anything lower than the weekly candles. But what you do is just look for the candles bodies. So this little area here is what I found is 183 represents how much time, roughly estimate of the time where the sellers actually formed this little structure here before continuing the path to the downside. Of course, we got the breakout candle right here. If you're looking at the screen, December 2021 on this monthly breakout candle, okay, of the range here. So basically, the reason that I kind of outline this range of interest is because, let's just say, at some point in the future, Dogecoin finally finds some sort of structural range before the turnaround. I'm saying before it finds that range, because I honestly still do not see any structure being formed in the Dogecoin market just yet. I know bulls, you guys are like, no man, no more downward pressure. This has to be the bottom, right? I'm not sure, guys. I'm honestly not sure, but I do not see any structure being formed, at least anything worth me kind of outlining, unless you do something like this, right? But I'd say for me to determine, or, if you're pulling up your charts out there and you're looking at the monthly candles, give it a full 6 months. Okay, let's give it a full 6 month range. I'm not saying like 6 months from now. I'm saying like, when you're pulling up the monthly candles, try to look for like 6 consecutive monthly candles that you can kind of define a range for. Does that make sense? So like, here's like 3 candles right here, right? 1, 2, hang on guys, sorry. 1, 2, 3, right? So 4, 5, 6. If you can locate some sort of range, right? Let me see how many candles are in this month here. See if this is a good example. You see like something like this. 1, 2, 3, 4, 5, 6, right? Now, nice little range, right? The breakdown candle here, June 2021. And of course, the breakout candle here, December 2021. But look for something, that you can define a range of interest, okay, on the monthly candles. All right. So, but again, so far I'm not seeing it. Let's give it a full. If we're gonna take this area into consideration, let's let this September's candle fully develop, and see if we can get 2 more consecutive monthly candles that can stay within the range of this little area here. I'll give you that precise level. It's going to be 0.0607. I'm using the Binance chart here on tradingview.com. Okay. Again, this video is not insinuating that Dogecoin is forming some sort of bottom or range or anything. I just think the market needs more time. I personally think that it will likely continue lower. Some of you may remember our video. Hopefully I'll leave a link for it. I'd have to find it. Where we said Dogecoin can go down to 7 cents. I'm glad it's kind of a slightly positive day, and I'm saying that I don't think the market is bottom. Again, so I'm not sounding like I'm on a bandwagon. So 7 cents, guys. It has gotten below that level where we thought that it would eventually get down to. Let's give the market some time, see if we can find that range, guys. Okay, I just said the same thing like 3 times. All right, so I've given you the example for the base, seller's base, 183 days. Yes. All right, the reason that I'm saying that it's probably in the best interest for the market to form some sort of structure is because if I bring your attention over to this little range over here, where I found like 1,000, 127 days. I mean, it's more like something like this, honestly, like something like that, and it's actually less time. This is the actual kind of base. This is how I find, bases and things of that nature. And the reason that the way that I find ranges or bases, which you can call them either or, right, is because first and foremost, I look for the kind of the candle's bodies, but I also look for the kind of those extended wicks. You see this kind of extended wick here? I don't know if you can see that on July. If you have your charts pulled up, please kind of pull up your charts as we go along on the videos. It's kind of better, okay? July 2020, if you notice that monthly candle, you'll see a very large shadow at the top of that candle's body that represents kind of extreme price action, unable to close kind of all the way at that low right there at about 0.0056, right? Again, just giving you an idea of how I find the ranges is really simple. And again, when you zoom out, so like this little range here, a lot of activity going on. The buyers are strategically placing their orders, accumulating this asset until, of course, it ripped to the upside. And the reason I'm pointing this out is because if you notice, it took all this time to consolidate and it produced a substantial move. Like if you zoom out, you see how large that move is. I think from the top, I think we've done this. We measured this before. I'm just kind of refreshing your memories on it. It went up 9,554% to the upside. So that's why it's super important. And I'm never like saying that I want the prices to go down because, I have some sort of a biased interest. I'm short in the market. I've never shorted Dogecoin. I'm not short anything right now. So that's the reason why we look for the structure, guys. And the longer it takes, let's see how much time, to form that structure, the better the breakout would be when it eventually breaks out. Okay, so the technical range is going to be 1,037. I just measured for this little range right here, the technical range, as the way that I find the base on the chart here. So again, let's look for something similar to what I just said, guys. Maybe even if it's less time, I know some may not want to wait that long, but you can't fight what's structurally required to have a practical turnaround in the market so that things can move in the opposite direction. If it doesn't happen, then you just have to assume that the market will continue to move down and seek financial support, or the serious buyers that are interested in accumulating this market once again and eventually sending the price back to the upside, if that is the true trajectory for this asset. I'm not sure, guys. Okay, I'm the neutral party. All right, so that is why I pointed out this 1,127, technically speaking, was it 1,037, I think I said. That's the reason why I wanted to show you guys this range, and why we should look for some sort of range moving forward to turn things around here. Okay, I realize this is kind of like what we went over in our last video, so let's just crank it down to the daily candles and see if we can look for some moving averages here. See here. All right, so we're looking at the daily candles, and my infamous two lines that I'm always focusing on, well, typically is going to be the 50 and the 200 exponential moving averages. These two lines determine bull and bear markets in my book. And as you can see here, it looks like the daily candle is currently below the 50 exponential moving average. One may say, well, okay, what does that mean? Well, the only thing that I look for to kind of determine, well, two things, right? We just went over the range. We're looking for some sort of base, right? If you crank it down to the lower time frames, the daily candles, I mean, you could just kind of look for some sort of base, something like that, right? But I wouldn't necessarily, kind of hold these ranges on the lower time frames, as some sort of solid indication that we're getting some sort of turnaround. I mean, I guess it would start in the lower time frames, right? But again, for the long-term players, definitely crank up those higher time frames to get a general idea of a very large range of interest for your long-term holdings there, okay? All right, so for the daily candles, the same thing applies. We're going to look for higher highs and higher lows. Dogecoin is continuing to make lower lows and lower highs. It is continuing to walk down the stairs, unsuccessful at making higher highs and higher lows. So naturally, this market will continue, guys, to the downside. If we get a move to the upside, that's fine. The only thing that I do is just what I'm doing now, pull up my daily candles, and I would only focus on the 50 exponential moving average, which is the green line, and the 200 exponential moving average. If at some point here in the future, you get some sort of sideways consolidation established, and it is established above the 50 exponential moving average on the green line. I'll see if I can kind of draw that out for you here. That's where I would, I'm not saying this is what I'm going to do. What I'm saying is if you're new to interesting analysis and you just want to get a general idea, a very practical approach to entering and potentially exiting the market, I'd use the 50 exponential moving average as my potential stop out, maybe a little bit lower, right? And play it to the red line, which is the 200 exponential moving average. And it may not look like a lot, but believe it or not, these are cryptos, and when you can get a move like that, it's a pretty handsome move. It's currently 40% away from the 200 exponential moving average. The green line is 40% away from the red line. Okay, so again, just to give you an idea of how I tend to play the market, a general idea. There's a lot more to it. Okay, so definitely, it's not financial advice. You can do it on your sim account there, and play the market in that manner. Again, you look for a close, a daily candle, not the lower time frames, a daily candle close above that 50 EMA. And of course, get a nice stop loss going, and pull out your I pull out my 3-to-1 risk to reward, right? Let's see what that would look like really quickly, and we'll close the video out. So if I were to like enter, like let's just say it's kind of near where it is right now, it's 0.0639. And just kind of put that risk to reward somewhere there, 0.09. So a 3-to-1 would be, yeah, somewhere right around there. So 0.0552 would be my stop out, assuming at some point here we can get that daily candle to close above the 50 exponential moving average. So again, you'd have to wait till it actually happens, if it's going to happen, and then pull out your risk to reward. You're going to place your entry wherever the green line is, and of course pull this line here. See the top line? You just pull it up to the red line, and just kind of the bottom little blue circle, you adjust it, right? And make sure that you're looking in the middle, just right in the middle here, and you'll see that it actually changes. And make sure it's a 3-to-1. If you normally take that type of risk, right, when you see a 3, it's just going to be 3. You'll see like a 3.0. And then that's basically how you'll determine your stop out. Okay, it'll be just a lower portion. Hopefully I explained it well. All right, so that's where we are on the Dogecoin market. You got a little bit of information for those who kind of actively enter and exit the market. That's kind of like a swing play, right? Because you're looking at the daily candles. And I think we covered quite a bit here, guys. So moving forward, just to kind of wrap things up, again, you're going to look in the higher time frames, the monthly candles. We're going to look for 6 months of some sort of range, some sort of established range to determine if the market is in preparation to break out of that range from the 6-month candles. And of course, on the players who do the entries, the day plays, you know, the in and out entries or swing plays, pull up your 50 and the 200 exponential moving averages to determine your entries based on the 50 exponential moving average and the 200 exponential moving average to see if you can, get something going with that information. So that's the end of the video. Hopefully you guys enjoyed that and you're doing well. So if you don't mind doing me a huge favor before you go, by simply leaving an appropriate thumb, I would appreciate it below the video if you enjoyed the content. And leave a comment so that the YouTube algorithm can promote this video. If you guys are new, we also explore the traditional stocks. You can kindly join us here on this interesting journey, and we'll send that out to you momentarily. I'd like to take this opportunity to thank you all for your time. Remember to always have a strategy. This is kind of a sneak peek on the strategy, right? Before you enter, keep that positive energy flowing. We'll talk soon, and bye for now, guys and gals.